It's Larry and my favorite day of the month. We not only get to listen to Cathie for an hour, we get to think about it really, really, really thoroughly, whatever it is that she said. And then Larry gets to fool around with AI. Wait till you see what he's done this month. Holy mackerel. So much fun. Larry, nice to see you this Saturday, the first Saturday of the month.
Yeah, good to be here, Randy, and had a lot of fun. You know, I mean, we have to use AI. We have to learn, even old farts as we are. Um, and but I've got a long history with AI, so for me, it's very easy to be facile with these tools. These tools come quite naturally to me. But it was interesting training the AI
Yeah.
and interesting being trained by the AI, and then coming to a coming to a optimal workflow um, between myself and AI. And that was actually the most rewarding part of the day.
And based on listening to B2G over the weekend and the All In podcast over the weekend, anybody of any age that is not involving themselves in this activity, I don't care what their profession is or what their skill set is, if they are not playing with AI and trying to increase their skill sets around this, they are probably going to fall behind.
Yeah, I would actually go a little bit further than that. I think you're absolutely right, but I would say that it goes beyond playing with AI. Unless they're integrating AI into their daily grind, they are actually going to be falling behind. It's said that our age group is using AI as a search tool,
Mhm.
that the 40 somethings are using AI to augment their work,
Mhm.
and the youngsters are are in are interacting with AI as a standard part of their
How they
thinking,
live. Yeah, yeah, yeah,
how they live.
yeah.
I think that we haven't really begun this journey. I think the journey has got so much further to go. Whether AI is going to become a very dangerous uh, component in human history, in human evolution, or whether it's going to become the platform for launching humans to the next level is only an interesting subject. But one thing's for sure, if you want to remain, if you want to be, if you want to have any opportunity to be part of what's next in terms of the human adventure, then you really need to be immersing yourself, not immersing yourself, you need to have AI be immersed in your life. I think
Mhm.
that's the better way to put it. Anyway,
Yeah,
it
100%.
was it
100%.
was definitely very valuable working with AI today because firstly, I collapsed the amount of time that I spent in preparing for today for these monthly um, things we do, this monthly podcast we do. But more importantly, it gave me much deeper insights than I had normally got from working with Cathie's in the know presentation.
Yeah, and of course, as always, we always suggest that people may want to go back and watch Cathie's presentation themselves because she's going to say it in a slightly different way. The advantage of watching this show, as you'll see if you watch both, is that Larry brings a huge amount of experience to the table from international, from literally building businesses on, I guess, four continents.
Yeah.
I bring my experience from the manufacturing world as well as the marketing world, and it's just the combination. Hopefully, is useful to you. This is commonly one of the most viewed shows of the month for this channel, and I think it is by far the most important. I don't think it's a close comparison in terms of the value that it would give somebody to understand markets, understand the economy, and be able to make better decisions with regard to how they maybe manage their portfolios.
What I'm interested in is to see in this AI journey if AI is able to come up with some observations that we may, or Cathie may have missed. So,
Yeah, how about that? All right, so let's start. Cathie started this time by diving right into the subject matter of the day, which over the last 24 hours, as I've been reading and listening to the news, I mean, it's you can't find a podcaster, you can't find a news show, you can't find anybody that believes that they're paying any attention to the economy, to the government, to politics, or to Tesla that isn't reporting on the continuing battle between the president of the United States and Elon Musk, which this morning, the latest I saw just before I came on was that the president said if Elon gives any money to Democrats, that would be the final blow. So anyway, Larry, let's talk about what Cathie though said, what her feelings were. I don't know if you want to start. If we want to start with the risk analysis part, or what do you think?
Cathie feels that the heat is being turned down, that both sides are retreating somewhat from their rather, you know, you know, World War III level confrontation. I think that it was regrettable. That's really my view on this whole thing. Highly regrettable from both points of view. I hated to see, um, you know, Elon leave the administration. I hated even more the cancellation of the appointment to NASA administrator. The fact that Trump did that, I think, was a very regrettable thing, and I think it really speaks to kind of the pressures in his cabinet and in his supporting cast of characters, because Jared really was not Elon's man in any way, shape, or form. He knew Elon, but not they weren't close. They were very aligned in their thinking, and their thinking was very, very valuable to the United States of America. Anyway, that to me was the biggest tragedy. And then I think that led to all else that followed, which was very, very regrettable. Um, I'm not taking sides in the battle. I would only add what I said last night on your show, and that is you don't pick a battle with the President of the United States of America. Doesn't matter who the man is in the seat. But when you pick that battle, you are not picking a battle with one man. You're picking a battle with tens of millions of people, of which that man represents either the boss of or the preferred candidate of. And the boss of part is what is going to sting very hard. And it's a losing battle.
I'm going to do another program on the whole thing later tonight, which will be a compilation of what I think I've learned about it over the course of the day. But I thought one of the most telling quotes that I saw said that you you can you have the issue of whether the president of the United States has more power or the guy with the ink, meaning the guy with 200 million followers on X has more power. You can have that battle, you can have that discussion all day long. It's been played out in politics many times before. But what you can't deny, if you look at history, is that nobody ever wins against Trump. He
Yeah.
never, ever, ever, it might end up being a draw. It might end up being something that, but he is not going to give up. You cannot.
Yeah, and moreover, he actually has the power of the presidency right now. So if you take both of those issues into account, but look, Elon. Elon is a genius. He is a genius on many levels. And maybe he will find a way moving forward, but I do wish he hadn't entered this path.
Right, right.
But he has, and I support Elon. I really do. I voted for Trump very, very reluctantly, not because of not because of his policies, but because of the man. I've spoken about my doubts about the man many times, so I don't have to repeat it here. Anyway, we're not here to discuss
Right,
this issue,
right.
except that Cathie did start with this issue, and what she said in essence was she thinks that both sides are retreating and both sides are, calling everything's good, everything's fine. I don't happen to agree with her. I don't think either of these parties are going to be able to let go. And so I think we're faced with, the next 3 years, 3.5 years of constant struggle and battle. And, as to, who Elon supports, I think that Trump's going to be disappointed because I think Elon will end up, supporting a guy like Ro Khanna, for example.
Wow, wow.
Um, you know, anyway, that's just my view. I could be
Okay, all right. Okay. Well, Cathie Wood, interestingly, in my experience, I've never heard her say why she trimmed Tesla ever before.
Yes.
Every time she trims Tesla, it's just because she's got more than 10%. This time she says she trimmed Tesla due to expected negative volatility. Now, I think she meant that broadly. I don't think she
Yeah.
meant that she had a specific negative volatility that was coming, but rather just in general, maybe that the stock had moved way out from where it had been just in March.
No,
Uh,
I think she meant expected volatility arising from Elon's actions vis-a-vis Trump.
so you think she was being more specific? Okay,
Yeah, because I'll tell you why. Because she said that when the SEC
right.
took Elon to court, she trimmed at that time as well
Yeah.
because of what she thought could be the impact.
Okay.
Because she's very cognizant of governance issues, having, I mean, she was an analyst, market analyst for many, many
Right.
years. And so she's very attuned to risk, to regulatory risk. And when Elon stepped over the line on the 420 thing, which I don't think he did, but
Yeah.
anyway,
Yeah. Yeah.
he was found to have done by the SEC. I mean, she recognized that that was a risk. And I think she recognized that what happened here is also a risk. And I think she called out that risk specifically. So it's not general market volatility or general Tesla stock volatility. It is volatility arising directly from governance issues.
Yeah. So she lists 6 risk issues that she keeps on a panel. I think this is instructive. So the first is the thesis risk. And she thinks that, and thesis risk, I would assume, means the overall risk to the company right now compared to other times or compared to other companies.
Now, the thesis is robotaxi, Optimus, energy, embodied AI.
Right.
That's the thesis. And she has, specific analysis related to each of those. And that fits with her general analytical view of what to invest in, or general
Right.
theme of what to invest in. And so I think the risk to the thesis is that the distraction away from the thesis of the company and the potential risk of Elon being stopped one way or another
Mhm.
from running that company.
Right. Okay. So she said the thesis risk increased due to regulatory negative potential.
Yep.
Okay. Her number two risk element is people management and culture.
Yep.
And she says that she lowered that for Tesla years ago after the SEC fight, and she still has it about at the same level now. She's never decreased it since then. So that's a high risk or a higher risk as of the time of the SEC fight. Then she has the execution risk, and she says right now that's mostly robotaxi, but she
Mhm.
has increased, or if you will, she's decreased the risk or increased her accept or acknowledgement of the impact that Optimus is going to have. She says she's been surprised that it's going to be a bigger deal than she thought.
Mm. Yeah, yeah. I think she's increased her conviction, I think is
There you
the other
go.
way of putting it, in Optimus.
Then she has her product and service leadership. She says she's lowering that now based on the loss of market share internationally. And also, but she expects this product and service leadership part of what she does to increase as the robotaxi rollout takes place. I, of course, have a slightly different version of that,
Yeah,
Larry. I think it's when we get to unsupervised
full
FSD,
self-driving.
that will be the time when the product and service leadership will be cemented.
Yeah, yeah. You know, I remain very firm in my conviction of this product and service opportunity. And so I haven't adjusted that risk at all. In fact, if anything, I've reduced the risk factor and increased the conviction factor,
And the last one is moats.
largely through driving FSD,
Right,
by the
right,
way.
right, right. Then she has moats. And on moats, she says, no, she hasn't changed her risk assessment on moats at all. She says it's very hard to beat Tesla. And I think that's kind of what you just said.
Yes.
Right. All right. So those were her thoughts. Oops, I'm sorry, I just might have messed up here. She mentioned about, of course, Elon reaching out yesterday and this morning. Um, uh, no, I'm sorry, that was me. I'm confusing two of my shows here because my script got in the way. Here we go. Let's go back here. Uh, no, that was it. Okay, so any last thoughts on the Elon Musk part of it with regard to Cathie's analysis?
No, in broad terms, I'm in agreement with her. I raise the political risk a little bit higher than she does. I call it a political risk.
Mhm.
It's different from those other risks. It kind of compounds some of the others. I think there's a severe political risk. I think the one thing, though, that we need to recognize is Elon, is a potential and very specific bridge to China.
Mhm.
And I think it's really very negative that Trump should have abandoned that. It would seem to me that that would have been worth Trump's while to swallow his differences. I think the cancellation of Jared as the administrator of NASA was
Yeah,
a really bad thing. Now, as far as the bill is concerned, I think I understand Elon's angst, but I'm a real politic kind of guy. I just understand that when you have 400 and what 93 people,
yeah. That you
you're
have
not
to.
going to you're not going to be able to move them forward, as a platoon. I mean, even Newt Gingrich in those years that he did so well with President Clinton, even Newt Gingrich understood that he had to give and take.
Oh yeah, oh yeah.
His with his Tea Party and his conventional Republicans and his Southern Republicans, and he made it happen. And I think that Trump was in that vein. So anyway, let's move on.
Well, no, I was just going to say because I always need to find the pony. Um, in my analysis, I'll give a little tease of what I'm going to talk about later tonight, and that is there are, I don't know, I would say at least 80% of the punditry that I saw that wasn't MSNBC, 80% of the rest of the punditry is praying for them to get back together is encouraging them to get back together, is asking them to get back together for the sake of the country. I mean, over and over again, that's what I heard people saying. And these were some of the smartest people on the planet. And so Elon has to be hearing that. The president has to be hearing that. They have to be hearing it from the cabinet. They have to be hearing it from their friends. So I'm hoping that all of that pressure will cause these guys to back off and let it get back to normal. All
Here
right.
comes the pony.
Yes, there's the pony. All right, I'll let you put up your analysis now. This beautiful analysis. Where do you guys see this?
Oh, my beautiful analysis. Okay, so let me share my beautiful analysis.
There you go.
Tell me when you see it.
I see it.
Great. So, I look forward to you helping me digest this. And just for everybody's explanation, if they're expecting to see Cathie's slides, what I've done is I've taken the slides and trying to bring them together thematically in a much shorter presentation, much smaller number of slides that really combine 3 to 4 slides per slide and made them thematic. So, are we even on the right slide now? No, we're not. So we start with fiscal policy, and the fiscal policy is all about how are we going to solve this tremendous deficit. Elon wants to cut spending like tomorrow. We all discussed the difficulty of getting that through a Congress. And so in the end, we have to define a way to get there, even if we're running a deficit and spending more money than we wish to. And so the calculus on that is that the current deficit is 7.5% of GDP. It's unsustainable. It's going to lead to the disaster that Elon has had us understand is the problem. The current deficit is 7.5% of GDP. Scott Bessent, our Secretary of the Treasury, says no. We want to get to 3% of GDP because at 3% of GDP, we can grow GDP by 3%. And that way, our debt will not grow. Our debt will remain static. And if our debt remains static, we'll be in a much better position and will probably lead to much greater growth, which ultimately will pay down the debt. So the reality is that we have a current deficit of 7.5% of GDP. If you look at the little graph on the right-hand side here, by the way, can you see my hand here moving on?
Yeah.
So really what we're looking for is a deficit reduction of 4.5% of GDP. That's quite a big number. It's in the $1 trillion range. It's above $1 trillion. And so that somewhat speaks to kind of Elon's concern. So the strategy is productivity-led growth, real growth acceleration, innovation-driven efficiency gains, and growth over austerity. So Scott Bessent's answer is, okay, let's not try and cut everything overnight. It's too disruptive. It's impossible to do politically. Let's achieve a little bit of reduction of cost, but let's accelerate our growth using efficiency driven by innovation. And we'll achieve that growth so that we achieve a 3% of GDP growth, 3% growth and 3% deficit. And that way they'll equal themselves out. Our deficit will become static if over time it may even reduce. Make sense?
Yes, absolutely, 100%.
Yeah. And then Cathie speaks about the corporate tax revolution. And to understand the corporate tax revolution, this graph is very helpful. Back in 1940s, our effective income tax rate was 15%. What this current bill is going to do is bring us back to a 15% tax rate. And that's the focus of, that's Trump's focus. If you think about it, Trump came into power around about this time here that I'm showing. And he was able to squeeze the growth of the tax rate. He was able to get the tax rate down sufficiently that it started reducing, and really he's targeting to bring it down even further to 2015 rate, to this 15% rate that brings us back to the 1940s. And if implemented, this would represent the most significant corporate tax rate reduction since the 1940s. Not sure that's true. I think the actual percentage reduction happened between 1970 and 1980, and it happened under Reagan, largely under Reagan. And then Bush allowed it to go up a little bit, and Clinton maintained it, and then it came down, in the 2000s quite dramatically. So.
No, and this particular tax reduction in the big beautiful bill is strategic.
Yes.
So it is specifically designed to give an immediate write-off on not only equipment, which has been done many times before, but also with regard to the structures themselves. So you build a building and write it off tomorrow, as opposed to over 40 years. That's a pretty big difference.
Yeah, and that's particularly important right now. I mean, that was done in the 70s, by the way. The investment tax credit was introduced in the 70s, and that, kind of saved the country in a way. And so I think this is that's a very important item. And I think that's the reason Trump proclaims this to be a big, beautiful bill. I think that's the focus, and that's Besson's focus. And I think that Elon is quite blind to that, because he does the numbers and he sees that it's not enough. He sees that there has to be expansion, and he just doesn't trust, what will happen. And so I think, you can see that my sentiment is on Trump's side in this particular argument. I could be wrong. I mean, 9/10 of the time when you disagree with Elon, you're wrong. So,
Yeah, right.
anyway, that's the story about the corporate tax revolution that
Yes.
Trump is trying to impact. And I think this slide captures all of that. And then we turn to monetary policy, or at least Cathie turns to monetary policy. And she says the money supply right now is at a historic low. And what is the money supply? It's how much money the Fed pumps into the economy. She says right now it's an historic low, that, we've got a -5% GDP growth, and money, M2, which is the money supply that counts, is at 4.4%. That's actually negative. And so if you look at the actual money supply growth over the period since the 1960s, we're at almost, a 1990 level. This is really a bad situation, and it does not augur well. What it means is that we're going to see, inflation drop very dramatically, but without the kind of money supply support that the economy is going to need.
Yeah, she makes the point that it is a drag against GDP. So she didn't give a percentage on that, but maybe if we could be looking at 3.5% GDP growth in the second quarter, maybe it'll only be 2.5, or just it's restrictive on the economy and keeps the GDP from growing as quickly as it could. Now
That's the big takeaways.
Right. So the good news is that last night or yesterday, the Treasury bought $10 billion worth of long bonds.
Yeah.
And I don't know if you remember, Larry, but I mentioned, I think it was about 2.5 weeks ago, you and I discussed this. I talked about the things that the president could do that he didn't need the Fed's help on. And one of those would be for the Treasury to start buying some of those long bonds. So this is called quantitative easing.
Yeah.
And this was the largest purchase of bonds ever by the Treasury in a single day. If my if the person who said that on X has his stats right.
And really what it amounts to is Scott Bessent saying to the governor, governor of the Federal Reserve, if you won't do it, I will.
Right. 100%.
And so I will tell you, I trust Scott Bessent's judgment a lot more than I trust this
Federal Reserve Chair.
governor, chair, I should say. And now Cathie breaks down the inflation because, in a way, the Fed is marching to the wrong drum. Because the core PCE, as shown by the Fed, which is the measure that they use, is running in the 2.5 to 3% rate, or is actually coming down from the 2.5 to 3% rate. It hasn't gone down much more than 2.5. This is the Fed's key metric. Trueflation, which leads core PCE by a couple of months, actually CPI by 60 days, is showing 1.8%. And so it's getting old. Both the indicator that the Fed's using, but also the continuation of the Fed in using this. And so the question is, why are they not acting? Why are they not bringing the interest rate down? Particularly as gasoline prices, which is a major PCE driver, which it's not in the 2.5 to 3% rate yet, is declining at a fairly significant rate and appears to want to continue to decline. So here we see core PCE and here we see trueflation. And more disinflationary surprises ahead. Fed policy flexibility is increasing, Cathie thinks, and tariff impact is less than feared. So that's one of the things that have kept the Fed from acting, is they didn't want to do anything before the tariff impact. Now, if I had been the Fed, I would have acted ahead of the expectation of tariff impacts. But this Fed is not friendly to this government.
Yeah, and again, 3 months ago, 4 months ago, I don't know, when the whole tariff thing started erupting, Jeff Lutz and I got on, I don't know how many times, and talked about the potential impact of the tariffs from the standpoint of people that he and I both know a lot about importation. And I think, Larry, I think you agreed with this pretty much down the line, that this was not going to go through to the consumer. And now we're seeing that it's not going through to the consumer. The businesses are absorbing it. The countries are absorbing it. It's not going to go through to the consumer. And my number has always been 0.8%. That's what my expectations were. The impact of inflation on the tariffs would end up being 0.8% for the entire year. And so I think that's the number. I continue to believe that's the number.
Well, the takeaway that Cathie has is that consumer behavior, this is echoing what you're saying, companies are absorbing the margin rather than raising prices. So price resistance is evident.
Yep.
So these are deflationary forces. What we don't want in the economy is deflation. And the Fed continues to risk our economy. Housing market. This is the bad news, guys. Housing prices are plunging. We knew towards the end of last year, and we said this as much, that housing prices, which were at pretty high levels, were at serious risk. But right now, there's a seller-buyer gap that is a major imbalance. We haven't seen such an imbalance, I think, since 2000. And it's pretty serious. Sales volume is 4 million versus 5 million in the 1970s. Now, you and I did some analysis. We did some research, and we said that in mid-1970, 1975, our population has grown by not much, 50%.
57%.
57%. Sorry, you're right, 57%. since the mid-1970s. And yet we're selling 20% less houses.
And we've had household, the number of the number of
Households.
housing units, households increased by
Households.
50% during that time and selling 20% less. Yeah.
And so we've had this increase in households by 50%, and sales volumes are still at 4 million. That indicates that people are refusing to move, refusing to sell. They want to sell, they want to move. There's a really big backlog of people who are ready to sell because there's been this fairly long period that people haven't been able to sell or have been resisting from selling. And we've got new home prices falling, a year-over-year decline on new house prices. So the CPI impact is 40% of index weight. That's a huge impact on the CPI. And of course, the Federal Reserve measures the CPI impact, in arrear on housing. And so we've got this double whammy coming on the CPI, and the Federal Reserve has not been able to recognize it yet. Pretty serious.
Yep.
Because look at the CPI impact, 40%.
Yeah, and there's no place else. I've gone over this. We'll talk about commodities in a minute, but I've gone over this, the various Trueflation charts because they break it down by category. There's no real place where we're going to be looking at significant increases. We're still going to see a little bit in the auto insurance area. We're going to see again a little bit probably in tariffs, a small amount in tariffs, but there's nothing that's going to balance out this drop in the price of oil, the drop in the price of gasoline, the drop in the price of eggs, the drop in the price of groceries. Literally, we are seeing negative right now, not disinflation. We're seeing deflation in grocery prices.
That's
We're
right.
seeing a little bit of inflation in eating away from home, which I just experienced in Hawaii. But eating at home, no, it's actually slightly deflationary right now.
And business investment, capital goods orders are declining, and there's an offsetting factor, AI boom. We talked about that. We've been talking about that for some time, and that's a central thesis of Cathie's, and power generation infrastructure build. So these are the factors that we hope will offset this decline in capital goods, impact on the economy as the AI boom and power generation infrastructure builds takes over. So we can see that the total capital goods orders reached a peak in 2023 and are starting to decline. We see traditional manufacturing in a severe decline, but we see AI and power infrastructure beginning to take up that slack. So that green is the growing sector, the red is the declining sector.
Yeah.
And the blue is the overall.
And the combination of tariffs, the big beautiful bill, and just the normal, what do you want to call it? The normal business cycle will hopefully pull manufacturing back up.
Yeah, yeah. And then Cathie's got some uncertainty factors that she throws in there. Tariff policy clarity, which is going to take a little while. Tax structure changes, which, the big beautiful bill has not yet passed. And the regulatory timeline. We still don't have clarity on regulation on AI boom and how we're going to solve the power generation issues. So, the investment outlook is pending on policy clarity, cautious on business confidence. And, Cathie has this recovery timeline as 25, 26.
Mm-hmm.
And the market implications, the takeaway is if AI and power are booming, then other areas are falling. So this is a really good summary of the forces, of the balance of forces in the economy today, which I like in a single slide rather than going through the 3 or 4 or 5 slides that give us the view of the different ones. Trade dynamics. And this is, this is the tariff war that Trump has immersed the world into. But I mean, it's had a huge impact. Look at the import decline in 1 month, 20%. But in a way, you know, importers got ahead of this a little bit, you know, because they knew it was coming. He signaled it so well. Trade balance, there's a rapid improvement in the trade balance. And the key question is, where is inventory right now? You know, that's the key question. So you see trade just fell off the cliff in November, and now it's, you know, climbing back in December. I mean, so everybody bought ahead of the tariff regulations, and now we're seeing, you know, this improvement in the trade balance. It'd be interesting to see how it's maintained.
Well, and this is impacting GDP dramatically.
Dramatically, yeah.
Most people think that it impacted GDP by 2.5%
Yeah.
or more in the first quarter. It's likely to impact GDP in the second quarter in the opposite direction, giving us a more positive number than we would have had otherwise.
Yeah, I mean, just all you have to do is
Look at
move this graph to the right by 3 months, and you've got an indication of what
exactly.
you would expect from GDP, right?
Yeah.
Of its impact on the GDP. Now, GDP is a much bigger number, so you know there's only like 10% of the GDP, but that's still a really major factor, really.
Yep.
So our trade balance is improving. Our dollar strength is still right up there. It's not declining as people had, you know, had indicated. And the inflation impact is still far from certain.
And we've got coming up this week CPI and PPI, so it'll be an interesting.
That will be the indicator of what the impact of this was. So Cathie says this is the most rapid bounce in trade imbalance ever in 1 month period of time, and an historic rebalancing is underway.
Yeah.
So productivity boom, and here we're getting to, you know, the whole thesis behind ARC, the whole thesis behind investors in AI and, you know, and robotics. And, you know, the real GDP growth is below trend, productivity is sluggish, but 2026, we expect a huge leap in productivity, 7% AI-driven stage. You know, we talked about how I'd used AI to produce today's slides versus the very slow, methodical, you know, process. Although I had used AI to clean up, you know, for example, the transcript and so, you know, to summarize some of what Cathie's saying. But here I use AI to actually produce these slides. And, you know, I told it the kind of thematic style I wanted. I told them how I wanted to think about what Cathie said. I told it how, you know, and it did a really outstanding job. The thing was, it was so good, I couldn't really easily put this into PowerPoint slides. It tried to do that for me, but the slides were terrible. But I think these kind of speak to, you know, Cathie's thesis quite well. And it just shows you the power of AI. And by the way, it took me less than a third of the time that it normally takes me.
Yeah. Incredible. Absolutely
Yeah.
incredible.
So we see the productivity growth trajectory in this slide. We go from 2025 to an all-time high, or at least an all-time modern high of in 2026. I don't think this has happened since after the post-war 46, 47 boom, and possibly since the 19th century with the Edison-driven boom, electric boom. This is going to be incredible if it's achieved. So it'd be interesting when we look back in a few months' time or even a year's time on Cathie's analysis to see if we were able to achieve what she projected.
And I've been talking about this, I think the whole time I've had the show. Productivity is kind of my little hobby horse.
Yes.
If we follow this productivity thing, if you check that out when that hits, if we can hit 3.5, 4%, 4.5%, it has a massive impact on everything. It has an impact on tax collections. It has an impact on earning power. Therefore, if people earn more, then they spend more. I mean, productivity goes throughout the economy. It's kind of like
Yes.
oil is the blood. Productivity is the nervous system. And it just I don't know if that's a perfect analogy, but it's still the entire body depends on
No,
uh,
I think productivity can best be described as the ideal weight to
oh,
height
there you
ratio of the
there you go.
body. I think body fat, I think productivity indicates body fat. Huge amount of body fat, real
Not
bad. Insufficient body fat, real bad. But that perfect fit is really what we're looking for in productivity.
yeah.
And so, we went from GDP growth of less than 2.5. If we achieve a 7% productivity growth, we will definitely see a dramatic increase in GDP growth. So for an historic context, 2020 peak was a -7%. What we're looking for in 2026 is a +7%.
Yeah,
Well, -7% included the pandemic, so
right.
that's the reason that it was actually that bad, although the current state is really
Not
-2.5. It's not that great, yeah. All right. I think I may be mixing up productivity growth and GDP growth here somewhere. This
well.
is
There.
GDP growth, this is productivity growth, yeah.
Yeah. Okay.
So the economic impact, a broader based rolling recovery, real wage growth acceleration, and corporate margins expansion. And let me just talk about rolling recovery. Everybody's been talking, and Cathie has been talking about a rolling recession. Why? Because the committee that decides to call a recession won't call a recession. I believe we have been in a recession for almost a year and a half.
It's actually, if you talk about the rolling recession, Larry, there's 5 categories, some of which have been in recession for 3 years.
I get that, but I don't look at
I
each
see. Okay.
category separately. I'm talking about the country and economy. If you
Got it.
use the classic test
Okay.
of a recession, we have been in one of the longest recessions in my memory. I think 1970 was the worst in my memory, but
Uh-huh.
I think we've been in as serious and as long a recession as the 1970s. 1970 recession was accompanied by huge amounts of inflation. And so we had this, terrible situation. We haven't had those huge amounts of inflation. We've had a very small amount of inflation, but compared to the deflation in the 𝐒𝐻𝐵 years, it was quite serious in the
Right.
economy, considered quite serious by the authorities. But I think we've been in a recession, and I would just test that by the ordinary man. I'm not going to test it in terms of, those who are well employed in
Hmm.
the booming sector of the economy, which was government, and then high tech. I'm talking about the working. I'm talking about the economy as a whole. So Cathie sees a broader-based recovery, rolling recovery, real wage growth accelerating, and corporate margin expansion. Talk about Goldilocks.
Yeah.
He
Yeah.
would be proud. And Cathie's takeaway is if we're right, and she always starts by saying if we're right. I mean, it's very important that she qualifies it that way. As we get into a broader based rolling recovery and maybe an economic boom in 26, we think this productivity measure will go to much higher levels. So one of the realities of economic forecasting is it always takes longer.
Yeah. Yeah.
So it's quite possible that she's a little early in her, just based upon, the history of these things. But anyway, we'll see. Time will tell.
Well, the productivity thing is so important.
Yeah.
But it is still only one component. It's a very important component, but only one component. I think that she's really made the case. I think that you and the AI that you used together, I think have shown it really, really clearly. Scott Bessent has been talking about it. It's a three-legged stool. I think that Bessent and Trump have put together a perfect approach. I have nothing but praise for this approach that's been taken in terms of tariffs plus the big beautiful bill. Could I throw some rocks at the big beautiful bill and think there's too much pork, blah blah blah, etc.? Yeah, but I think we need to get moving. We need to get it. Let's let's get a solution.
So
And
let me get this right, Randy. You are putting on the table quite clearly that you agree with Trump and not Elon in this discussion.
I agree that I think that Elon is right that the bill could have been better. I think that he's wrong, and this is really hard for me to say. I'm having to drag it out of my mouth here.
I'm dragging it out of you. Yeah.
Yeah, I think he's wrong, and that he's not fully taking into consideration the dynamic way that the big beautiful bill is going to impact the economy. But if we get the tariffs the way they are now, 10 to 15%, if we get the big beautiful bill with some modifications, and we get those two things through, I think that the productivity thing will be icing on the cake. We will already be at 3.5, 4% just because of those two legs of the stool, and the productivity will just take us to the 7%.
Let me ask you a difficult question then.
Sure.
Do you think Elon, by taking the actions that he's taken, is imperiling the big, beautiful bill?
So just this morning, I was beginning to see some feedback from some congressional people saying that the phones are ringing off the hook. So we did talk last night, Larry, about the thing that Elon has. There's an old saying, never go to war with the guy who purchases ink by the barrel. And for most of my crowd who's over 55, we recognize there used to be newspapers and that the newspapers were the people that bought the ink by the barrel. For the few of you who are only 25 and you don't get, I just explained it. Okay. Elon has the largest voice by far in news today, with over 200 million people following him. His go to war post the other day was seen by was what do you call it? Not liked, viewed by something like 150 million people. So when he says, call your congressman, we used to do this. We used to call our congressman 20, 30, 40, 50 years ago. The newspaper said, call your congressman. The opinion page said, call your congressman. And we called our congressman. Well, that's what's happening right now is congressmen are getting called. So how does that balance out over the next week or so?
I think what you're saying to me is yes, Elon is imperiling the big, beautiful bill.
Or he is helping to fix it.
Yeah, I just think that the balance of force in Congress, that's going to be very, very difficult, if at all possible. So I think, I mean, Cathie thinks that everything's quietening down. I think we have still some drama to go. I hope.
Oh, I think there'll be some drama, but there always is on these bills, Larry.
Yeah.
But
I'm talking about the drama. I'm talking about the drama.
I think we'll see a lot in the next week.
I'm not talking about drama on the big beautiful bill. I think that's going to be a sort of a incidental.
Oh, I see.
I think that's going to be an incidental disaster,
I see. Okay.
But I think we're going to see some. I think Elon's trying to dial it down, but I think Trump senses victory at this point, and he tends to be a little. He tends to not be a really good winner. He's neither a good winner nor loser be. I think Shakespeare might have said that.
Somebody like that, yeah.
Not said it the other way around, but okay. So the equity markets are strong despite drama. Credit spreads are at 30-year low. What do we mean by credit spreads at 30-year low? It means the spread between the very, very top level credit and the credit at the very bottom level of the credit stack is very limited, which indicates there's not much risk in the market.
Was it IBM the other day? Was it IBM or Microsoft that their credit rating or their bond yield was only 5% higher than 10-year treasuries, or maybe it was 30-year treasury.
Yeah, I didn't see that point, but that makes sense to me. That just shows that we're at a point where people are prepared to accept credit, from where they may not have been as comfortable and priced at not that comfortable a level. By the way, XAI went out and borrowed money last week.
Yeah,
So
yeah.
Bitcoin gold, the ratio is rising. Bitcoin is running ahead of gold, which is pretty strong indicator of market strength. And the dollar index remains pretty resilient, even despite, all the negative, supposition about where the dollar is going to go. Are we going to have a digital currency? Is the BRICS going to take over? Is the United States no longer a leader in the market? Blah, 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 blah. But the dollar remains the strongest currency and it's the most resilient currency, I should say. By the way, that's not the Chinese yen is in, I wouldn't say free fall because it's managed, but it's in, they're in an interesting economic
Well,
position.
the
So,
Chinese government refunded their banks yesterday by the largest amount ever.
yeah.
I forget what the number was, but it was a huge number that they poured into the banking system.
Yeah, when you say refunded, what you mean is they added a very large amount of liquidity to the banks.
Yeah.
Countries don't add large amounts of liquidity into the banks when those countries are doing great and when that
Right.
currency is doing
Right.
great. So if we look at market performance through 2024, we see that, Bitcoin gold has gone through the roof. S&P is, doing pretty darn well. And the credit spreads, and in this particular graph, going up is better.
Mhm.
Um, Credit spreads, so in other words, it's inverted, are at a pretty high peak in terms of normal.
Mhm.
So yeah, we're at credit spreads, the 30-year low, equity markets with political drama, and are close to their all-time high.
Yeah. Yeah.
Dollar strength supporting confidence and Bitcoin gold ratio improving, which Cathie views as a very positive sign. And 2024 challenges have been overcome. The election uncertainty is behind us. Political controversy, she says, is behind us, and yet we seem to create more and more every day. Policy uncertainty, that definitely is behind us. And geopolitical tensions, not sure they're behind us. I think we have some challenges yet. And so corporate health is the underlying strength and market structure remains resilient. So there you are. I mean, that's all
Yeah.
good.
So
All good.
the two things that came out of these slides would have included both that she didn't call it quite risk on, but just short of a risk on environment. The VIX has dropped under 18, maybe even under 17, I think the other day. And so we're pretty close to a risk on. We're only 2 percentage points away from all-time high on the S&P, after dropping virtually 20%. And actually, the NASDAQ, I think, is up for the year. So we're getting pretty risk on, and corporate America seems to be in pretty good shape.
I agree. I agree. And then Cathie, always ends her monthly presentation with the thesis of ARC. And that thesis is very important because it is the central tenet of how she sees the economy growing in the future. And that is through innovation renaissance. And she uses two aspects of the renaissance um, from the financial sector as evidence. The one is the Circle IPO. So Circle is, a so-called stable coin company. It's second, I think, to USDC. It had a fantastic market reception. Circle famously failed in its attempt to go to market back a couple of years, and mainly because of the uncertainty engendered by the Biden administration on the regulatory, situation, or the regulatory in, environment for stable coins. So there's a fantastic market reception because of this regulatory clarity. And the other thing, about the success is it really asks the question, are we going to see a return to IPOs? Such a successful IPO, are we going to see a return? Because the market liquidity in the venture fund market is really quite important, certainly to me, but I think to every venture capital investor. And there's been, real questions around this issue, and this looks like maybe it'll open the door. She didn't mention that, but it's of interest to me. And then Neuralink had an oversubscribed round, massively oversubscribed round. I'm wondering whether it would have been as massively oversubscribed if it had come before the bust up. My sense is it would have been just as well supported.
Yeah.
Brain interface, computer interface is revolutionary. I think we should say that Neuralink are not alone in this field. There are several companies, burgeoning companies in this field. Neuralink is unique because it has, all of the hallmarks of a Elon Musk product.
Right.
It's pretty unique as a product, and it has transformative capabilities in terms of its potential. So there appears to be animal spirits abounding. It turns that we're risk on again. As you pointed out, she didn't say that, but she says return of risk appetite and innovation investment, financial evolution, traditional finance embracing digital transformation, and next-gen tech, breakthrough technologies, gaining market validation. So, this is Cathie's mantra: innovation ecosystem transformation, sector convergence with traditional banking going into digital assets, healthcare going into biotech AI, finance going into DeFi and crypto, and the investment themes in this gigantic transformation that she sees: a digital currency infrastructure, brain-computer interface, AI-powered automation, and energy infrastructure. This is the key investment themes that she sees ARK pursuing in the coming years. And the takeaway from her is the return of animal spirits in financial markets signals renewed confidence in disruptive innovation and next-generation technology. And, if we've interested people in this, I urge them to go and listen to Cathie go point by point, slide by slide, because she takes it to much greater depth than we are able to get into today.
Yeah. Well, Larry, I think as usual, I always enjoy going through this with you. I think this new AI that you're showing had advantages to everybody who was watching, just to be able to see what AI can do. We see a million. It's so hard to keep up right now because it's like every day somebody's coming out with a new app or a new method for. I mean, the other day, I guess, there's a bunch of new ways to actually build apps. And I'm thinking to myself, well, I can think of some apps I'd like to build, but oh my gosh, just the idea of figuring out which one of these companies to use and then to learn the process. And it's probably really easy, but I think it sounds overwhelming to us sometimes. But
Yeah.
you've shown that it's not so overwhelming and you can get some amazing results.
That's right. That's right. I mean, it really didn't take any work on my part to learn this particular tool. Um, I use Grok on an absolutely daily basis. I use Grok to fact check. Used to use community notes to fact check, but
Yeah.
honestly, I wasn't that. Yeah, I'm not that. I'm not that entranced by them, by it. I think that people just pile on. Each side piles on. And it's somewhat helpful, but Grok is the most helpful. So whenever anybody makes a statement which I have any questions about, I immediately grok it and grok. I will say Grok is completely even-handed. They don't bow and scrape to their god Elon by any manner of means. I mean, sometimes Grok is quite critical of Elon,
Yeah.
or represents the critical side in any debate, which is very refreshing, incredibly refreshing. But I use Grok almost on an hourly basis. But this is a lot more. This is agentic AI,
Right.
where AI goes out, collects the information, and then accumulates the information along the themes that you give it or along the instructions you give it. And it only takes a little bit of getting used to. So I encourage everybody to do it.
All right, Larry. As always, my great thanks for coming on and helping with the Cathie Wood story. And of course, we will continue our ongoing conversation on Monday night. So everybody should look forward to that. Any last thoughts about this month's report?
Promising, promising, promising.
There you go. And there's a pony there somewhere, Larry.
For me to find a pony, that pony has to be fairly evident.
Yeah, I hear you. I hear you. All right. And to all of you out there, it has been great talking to you.